And in this discussion, let's assume that we have a long position. In other words, we've bought. Okay? As price starts to move in your favor, you need to be thinking about risk reduction first and foremost. That's always should be your job one. And of course, you have to have a place to start taking profits. And I have to say that there isn't a totally exact, answer on this. And that's because no matter what I say, people are going to do it differently anyway. You're going to, which is okay, but I'm going to give you some general guidelines that you should find quite useful. When you're up 10 pips on a trade, you can start to look to get the risk either out of the trade completely, like moving the stop to break even, or as an alternative, you could take some profit, like for example, on a very low volatility pair that's not expected to move too much, and then move the stop up enough so that if you were to get stopped out on the remaining position, the overall net effect would be about a break-even trade, maybe a slight profit. Now, before I go on, when I say take 10 pips profit, make sure you understand that would be on a very low volatility pair with a very small stop loss, okay, like 10 to 12 pips. But here's a very good rule of thumb. Whatever you're risking, make that your first profit target. So if you're risking 20 pips, go for 20 pips for your profit, for your first profit target. If you're risking 15 pips, look for about 15 pips for this target, for the first target, okay? The next place to look for a target is at the swing high in the case of a long. That was that point B that we saw. That was the point that was used to measure the fib pullbacks from. Now, sometimes that swing high will be less than 20 pips away from your entry. And it doesn't matter. Even if you risk 20 pips, you should still take profit at the swing high, even if it's less than your stop amount, and don't hold out for the 20 pips. Okay. The idea is to just keep it simple and take regular profits out of the market. So back to our example again. Since the initial risk was 15 pips down here, then we'll want to take 15 pips profit. We bought it at 96.75. At 96.90, we take our first profit right here. For the second profit, you could take something off at the high at point B right here. But usually what we'll do is, since we already have a profit and a break-even stop, once you get a profit, get your stop to break even, then we're going to go for a profit of twice the initial risk. And in this case, it means that we're going for a profit of 30 pips, which I've marked off right here. Happen to hit it right there. Now, having said that, the high of the swing at point B is generally a very good place to take profit, okay, if on part of your position, if you're not already out. In fact, I actually prefer, now this is my personal preference, to use the bodies of the candles right here rather than the wick, the high of the wick. I like the bodies. I just found sometimes it doesn't quite make the wick. So that's just my preference. You can do what you want, but for sure, do not allow a loss at this point. There's a very good reason to take a profit here. Why? Because it's the first known resistance that you come to after you're in this trade. Once you get in down here, where's your first resistance? It's right here. This was resistance. And then it went down. So that's where you want to be taking some profit, okay? And this might be as high as the price will go. So just do not allow a loss at this point. And in fact, you should make sure to take some profit there. Okay? If price continues moving up in your favor, then you have a really good opportunity for a bigger move because there are several levels you can look at for the next targets. Now, in this case, we already had a profit. We had the luxury of going for a profit equal to twice the initial risk up into here. But we want to keep this simple. If your first profit is taken at the high of the swing here, then for the next profit, look for double the risk. Okay? We just always said that. If you risk 20, look for 40. But if it's going up here and you're going for 40, but you see an obvious resistance before 40 pips, take the profit. It might be up 36 pips or 37 pips or 35. Take the profit. These are counter trend trades. Learn to take profits at logical levels. Once in a while, you'll see that something else happens. Following this big move down, if you go to an hourly chart, okay, the 38% fib retracement of the entire move down of the day can be a very good level to go for. It may or may not be double the risk. Don't worry about that. Just keep in mind, though, the price won't get to those 38%ers as often. So if you look at this same example that we've been showing all the way along, the Aussie US dollar 1 hour chart makes us drop into the London close like this. Okay, I've drawn the fib from the high to the low, and you can see the various fib levels marked off here. The 38% fib was actually hit right here, but what was the problem? Not before price dropped here and would have stopped you out on the remaining position. So We got our 15 pips and 30 pips right in here on this little bounce on our 5-minute chart. We just saw that. And then price retested the lows once more before rallying up to the 38% and beyond. So that was kind of unlucky, but if you do get a move going for you, the 38% fib level is another good target to shoot for. They're just good levels to take profits at, and of course you should use good trade management, like moving your stop up as price progresses towards those levels. Okay, really important. Now I just want to say a bit more about the idea of the 38% bounce, because it can be just a beauty when you get them. Here's the deal. If you're buying at the London close, consider this. It's because price has made a move down during the day of at least its 5-day average daily range, hasn't it? So if you go to a 1-hour or a 4-hour chart, you can probably see a nice move down. A really good trading idea is to calculate that 38% Fibonacci retracement of that move down and take a profit there. Okay, and again, it won't get hit as often, but if you're taking, maybe you're taking a trade that's in the direction of the overall trend of the bigger time frame, like maybe a daily trend, and so you might want to hold out on these on a portion of your position. Okay, this level tends to be a really good place for price to bounce off of after a big run down. Plus, remember that the trading day is now much quieter since London is closed and New York is winding down. So the likelihood of price taking a big run back up against once again, it's just not as great. Okay, unless of course new information comes into the market of some kind. So the 38% fibs are often very good, rather than trying to hold out for too much. Just don't forget, the idea is for taking short-term trades and profits. And again, as price moves up to the 38% level, and say you find yourself up 2 to 1, you've made, you made twice as much as you initially risked. That's a great place to close the trade out, or at least move the stop up very closely if you want to go for that higher profit target that looks logical. Okay, here's another graphic illustration of it. Graphical, whatever that word is.
Scribbled
illustration. Okay. This yellow dotted line right here represents a 38% fib retracement from the high of the day at point X down to the low of day at point A. Okay. After the entry on the London close, here's our London close zone. Price hits, it bounces, it comes down. Here's our noble entry right here. Our stop loss is right down here. 79% we enter. Price rallies up. Here's our initial profit, because our risk was 15, so we took a 15 pip profit. Here's our second profit that we could take. Here's another profit. That should have said third profit, I guess. Or I guess what I meant is instead of taking it here, you could have taken your second profit here, depending how many lots you're trading. And that should be twice your initial risk. And here's another great place to take a profit right here. Okay. And this is actually another thing you really watch for this. If you see that this low is a support area and it comes up here, then you definitely want to be taking a profit off here, because that's a very, very common place for it to bounce back down again. Okay,